markets, what's going on? I'm going to share my screen with you. We have just seen so much volatility this year. At the start of the year, obviously, or to end last year, I should say, nice drop in mortgage rates. And then surprisingly, to start the year, rates peaked up again into that mid to upper 7% range. Since then, really since May, we were on a great run down for mortgage rates. And you can see in just the last 30 days, really since the Fed raised the Fed funds rate, we've had a spike up in mortgage rates, where today the 30-year conventional purchase average is pushing 7%. 6.95 is what I last saw this morning. So a surprise jump in rates. Why that's happening is hard to say. Some think it's the issuance of a bunch of additional U.S. debt. Some think it's pricing in a Trump election win, which is expected by the markets, at least at this point, to potentially be inflationary. So again, there's not a lot of consensus as to why rates have moved up as quickly as they have, but that's what we're seeing right now. In terms of what we're seeing, or what we expect moving forward, this is a chart of mortgage-backed security prices. So again, prices dropping means rates going up. The reason I show you this, back here, September 18th is where the Fed dropped the Fed funds rate. And ever since then, you can see mortgage rates have gone up, mortgage-backed security prices have dropped, and they've fallen below now 1, 2, 3, 4, 5 different support levels, right? So we still have a little bit of room to fall here, meaning rates to climb, before we find meaningful support. So we're not out of the woods yet. Next week is the opportunity to potentially turn things around, because we start to get a lot of big data coming next week. We get the Fed's favorite measure of inflation on Halloween. And then on Friday, we get non-farm payrolls and the unemployment rate. Those are both so big right now. And then obviously the week after, we've got the presidential election. So not the direction we want to see the markets heading in the short term, but that is the key word, is short term. The anticipation is that this will still continue to be a positive move for mortgage rates as we head into 2025, but we're dealing with a little bit of turbulence, and hopefully we will see things turn around following the elections. Reach out if you guys have any questions.